more and more of the TradFi community's users wanting access to DeFi yields and DeFi systems, and the TradFi folks will be in a position where they have to think of ways to provide that access.
So anyways, all right, let me continue down this rabbit hole. Let's share this real quick. We're going to go back to that video of Sergey. And this is, by the way, I think it's the founder of Aave that he's speaking to.
Yeah, that is for sure.
And again, remember, this info is it's relatively new, so it's only about a month old. So listen to how he talks about how if you're in DeFi, if you're in this room, because they're talking about DeFi, it literally says "The Rise of DeFi" is the title of this video. He says, everybody in this room, if you're in DeFi right now, you're in the right place. And then I'm going to play another video clip of CYPRX 2024 that just happened literally like last week, right? Of an individual saying that asset managers are going to need to give their clients access to DeFi because they're going to want access to yield-bearing assets in this new digital ecosystem. So just listen here, what Sergey says.
Different kinds of tokenization models, and I think that if
Sorry, excuse me. It's not Sergey that says this. It's the co-founder of Aave. His name's Stani Kulichov.
If this particular kind of like fundamental framework is solved, and there's like a really good standard for it, and someone will do that. Hopefully, Aave some way can be supportive on that essentially, and extending and growing that credit. And obviously, what we do with Chainlink is really fascinating because when you have essentially proof of reserves, you actually have a more valuable, more kind of like auditable collateral as well down the line. So I do think it's a really fundamentally one of the biggest problems to solve now, and I think that's you're all in the right place at the moment.
Yeah, I think the way it really looked for DeFi, and I think the way it's going to look for RWAs, the way it's going to look for our whole industry, is that it's...
So he just said, right, this is the founder of Aave, which is one of the biggest DeFi platforms right now in the space, okay? They're doing work with traditional financial players. You can go look that up on your own time. That is for a fact. He just said, you know, in talking at a DeFi, on a DeFi panel, you're all in the right place. And then he giggled afterwards, like, when you hear a giggle like that, you're pretty damn confident, you know, like, so with that being said, I was looking more into the individual that was sitting on, because I hold Chainlink, on the panel discussion with him, who is Sergey. He is the co-founder of Chainlink. And listen here what he says at CYPRX 2024. By the way, this is from 3 days ago, only has 798 views. Keep in mind that I just showed you guys, Ripple's projecting the DeFi market space to increase to $601 billion by 2032. I just showed you guys DeFi Llama, 80 some odd billion dollars locked in TVL and DeFi. Listen to what he says here about how asset managers are going to want to provide DeFi to their clients. Think about that. Institutions aren't here yet. So this is me confirming to you guys that we're early. We're early. The smart money, which I'm going to also prove to you is coming, is not here yet. Listen to what he says.
Start off. If I can ask you, please, what you think has triggered this increasing adoption of blockchain technology by asset managers, and also what technology is needed?
Sure. So I think the asset management industry, the buy side, has often driven capital markets towards new technologies and new ways of doing things, because they're, in a certain sense, the foundational end user and customer of what the financial system does. I think the asset managers have kind of adopted blockchain technology in a faster way than many have expected in the capital markets, specifically BlackRock's BUIDL, some of the funds from Fidelity, some of the great work by Franklin Templeton and others, right? So you've kind of started to see the buy side drive adoption of blockchain technology, which has made everyone else who serves the buy side in some form pretty interested in that problem. That has been one of the big factors. Another big factor is the efficiency gains that are generated by applying blockchain technology to problems of settlement, collateral management, payments, and various other more back office problems that are extremely valuable, but not particularly well understood, even by some of their users, because it kind of just works. But when you actually look at how it works, you see a lot of room for improvement. So there's these two big categories of adoption. And in the second category, you're seeing more and more stable coins, some central bank digital currency work, payments work, collateral management type work, settlement related work. And then in the first category, you're seeing more and more real world assets and tokenized funds from large asset managers and new issuances by banks of tokenized digital assets of various types. That is in the next year going to merge into a very productive active market, because now you'll have a asset and you'll have an efficient payment method. And as those two things continue to meet more and more, you'll see more and more adoption, because the efficiency and the ease of use of the payment method and the ubiquity of more and more available ways to buy and interact with digital assets, and the growth and the amount and quality of digital assets as inventory and financial products, that will naturally create a growing market. That's what we're.
So he's talking about naturally a growing market being created right now. What he's talking about is the infrastructure is being laid. He literally just opened the door for you guys. If you have an imagination, close your eyes and listen to what Sergey said. He just explained to you the back end core banking infrastructure and how it's all changing. He literally just physically broke that down for you guys, created a layout that you'll have to visually represent in your head. But he has meetings with institutions. He knows what's happening in the back end infrastructure. And he just broke that down for you guys in detail, how that's all changing and how that will lead to scaled adoption and how it's happening for the first time ever. He literally said this has never happened before. This is all happening now, right? That is so monumental, because listen here what he says.
What we're starting to see, and which the asset management industry has kind of really in earnest kind of shot the gun in the air and started the race because of the adoption they're seeing. Interestingly enough, they're seeing that adoption in large part from the public blockchain community. So I think you will see the institutional TradFi community view DeFi and the public blockchain community as a big, valuable customer base. And then I think what you're also going to see in the coming year is more and more of the TradFi community's users wanting access to DeFi yields and DeFi systems, and the TradFi folks will be in a position where they have to think of ways to provide that access.
I mean, I don't know how else to drop the bomb, bro. Like, do you understand? You got to dig into this stuff. Here is another video breakdown. Let me stop sharing my screen and present it in a different way so you guys can hear it. But listen to what this guy says here. This is another video from Cybos, I believe. Excuse me. It's Nikki. I'm not going to butcher that last name. Geez Louise. Yeah. He's a highly reputable individual at Chainlink. And listen to what he says here. He talks about how we are in the early stage before financial institutions come into this space. Take a second here and listen.
A technology in search of a problem to solve. And the past year, I've seen a lot of mainstreaming and financial institution adoption of blockchain. So we used to ask, are banks ready for blockchain? But now we're looking at how they're adopting it. How are you seeing those levels right now?
Yeah, I completely agree. And I've been on that journey for a number of years now. And being at Cybos, it's amazing to see the contrast, even within 12 months. So the way I described it in 2023 was you could, when you thought about how banks are dealing with blockchain technology, the adoption, and importantly, the problems, the customer problems that they're solving, that adoption level, last year for me in 2023 was palpable. But I think now we've seen an emergence in far greater scale adoption across a wide range of use cases, across a wider range of geographies, and with a wider group and array of participants. So I think we've really made that transition from it being palpable to now we're starting to see that it being tangible. And these first tangible points about really not just POCs and pilots, but full production scale deployments, live transactions that are being undertaken within regulated financial environments. And so that really, then we think about the nature of how organizations are using this as a stepping stone to then what comes next. Then now we're at that point where the earliest stages of scaling up some of these particular transactions. And I think given the way the banking sector—
Bro, I don't even want to lay out the rest of the juice he's got. He literally just confirmed that we're just not there yet, people. Come on. We're still in the proof of concept phase, but we are about to exit that proof of concept stage in the next probably year to year and a half max. Like, we are on the very tipping point of all of this really coming into fruition. And I mean, because of the way that the mainstream crypto ecosystem has people's brains manipulated in a little juice bowl, so many people are about to just get, bro. So reason why I showed you that is because yet again, they're talking about DeFi. Let me wrap up my spiel because I want to get you guys on the floor here. Chainlink, just recently, this was announced October 24th, 2024. Chainlink brings DeFi to Bitcoin with Spider Chain and CCIP. Talks about how, as part of this partnership, Botanics Labs has joined Chainlink's Scale program. The program promotes sustainable growth of decentralized protocols by providing essential resources for long-term success. Chainlink Scale will allow Botanics to access to premium Oracle services, including data feeds, and reduce operational costs during the early phases of Spider Chain Network. Operational cost is one of the reasons that financial institutions are hindered, and that's starting to change, right? Then here, look at this. Remember, I told you guys to be watching World Economic Forum and IMF talks. Well, I was watching this forum the other day, and they were talking about Chainlink. They were talking about DeFi. I was like, nah, I cannot believe I'm freaking 4 hours. I was 4 hours, bro. Listen, this is crazy. I was 4 hours into this video, which I shared in the private CYPRX research chat, right? It's like 8 hours long. And I was like, all right, I'm about to be done. I'm going to quit. This video is too long. It's too boring. There's no juicy information. Then all of a sudden I come back from making my coffee and I hear them say Chainlink. And I'm like, no, what? Wait, hold on. Let me dial in. So I watched about another 30 minutes and this is what they were talking about. So look, October 11th, 2024. Like, this is going to blow your mind. WEF, World Economic Forum, talks DeFi regulation, HKD stablecoin, and integrates Chainlink.
Wow.
Yeah. Okay. I didn't say they're talking about crypto. I didn't say they're talking about blockchain. They're talking about DeFi. And what are they talking about? Regulations. Look at this. Welcome to Finance Redefined, your weekly dose of essential decentralized finance insights, a newsletter crafted to... Okay, hold on. This week, the World Economic Forum backed a sandbox. Remember, we're still in the proof of concept phase, and we are going to eventually come out. And what I've shown you guys is that they are building the infrastructure and laying the foundation for financial institutions to adopt and offer DeFi to their clients. Do you understand? And look at what they're talking about. We know that they need regulations, and look at what they're doing. They're literally creating sandboxes, which are proof of concepts. They're testing grounds. Imagine a little kid playing in a sandbox, right? They can test this shit. They can send transactions. They can do all this stuff without affecting price action. Do you understand that? Okay. I hope people do that are listening, that exists. Anyways, look at this. This week, World Economic Forum does a sandbox first approach in DeFi adoption, urging regulators to use regulatory sandboxes to build innovation and manage risks in DeFi. World Economic Forum backs this sandbox, and it's urged regulators and policymakers to conduct DeFi-related innovations and experiments within regulatory sandboxes. The statement from the World Economic Forum aims to focus on risk mitigation and assurance of transparency, created tailored approaches to DeFi regulation. The World Economic Forum said here that countries adopting a nimble sandbox approach had shown signs of advancing DeFi innovation by addressing inherent risks in DeFi. Okay, this is massive. So when I heard this, I was like, nah. And then they were talking about how the IDA integrates with the HDKA stablecoin with Chainlink. And you just heard Sergey mention that the ability to transact with stablecoins and these crypto assets, these digital assets, is becoming sound in principle in the core banking infrastructure behind the scenes. Come on now, people, put two and two together. Like, you know, so anyways, moving on, another video clip here. This is an individual saying that, and by the way, the title of this is from Token 249 just a couple of weeks ago, DeFi Titans, the path to resurgence, right? Listen to what he says here about how we're at a DeFi inflection point.
I think there's a lot of, catalysts coming up in the fall with the US elections. Stani's been tweeting about a DeFi renaissance. So I'm curious what you guys are looking for in the next couple months for the rest of the year in terms of the market, and how is this cycle different from the others?
So I think that what I think of when Stani is talking about DeFi renaissance, I think of it as like there's a, it's a DeFi inflection point that is coming. And
right, so that just falls in line with exactly what we're talking about, how this is not going to happen overnight. But remember, I showed you guys $88 billion locked in TVL and DeFi, and Ripple projecting, $601 billion by 2032. And look at what the Xrpl is doing right now. They're incorporating a massive DeFi ecosystem, which I know you guys are going to cover today, right? Moving on, this individual, I believe, let me just show you guys who this is real quick. He is the, he's one of these individuals down here. We got co-founder of Aave Labs. We got founder of Sky. We got a founder of Infinex. All right. Just look up their credentials so you guys can see who they are. But look at what this dude says. He talks about how every person in the planet eventually is going to utilize DeFi. And then the last video I'm going to play is how they're talking about, because I'm going to play them back to back, how lending and borrowing is going to scale. And then I'm going to play one last video clip of an individual saying that smart money is not going to leave the ability to operate in DeFi via lending and borrowing on the table. So he literally is confirming, after these gentlemen confirm to you that this is only going to scale, that institutions are interested. So just listen to hear what they say real quick.
Financial infrastructure that is available to anyone. It's resilient, and the last point is that it's also it's also profitable. So we have these decentralized organizations like for example Sky and Synthetics and Avedao, where these are open communities where people make decisions, choices, and actually these public goods make revenue, and that revenue is then streamlined back to the users in terms of different types of rewards and to grow and expand these public goods more further. And I think this is a really fascinating phenomena to follow and build upon, because DeFi is not about just creating financial opportunities that are based on distribution of governance power or community membership, but it's about actually creating something really valuable that can be applicable to every single person on the planet. And we see DeFi now, and so in the past, like I started
right. So imagine that. Imagine if, considering that right now there's only 520 million or some odd users like that in crypto. Imagine when we get to 2 billion users, and half of those users, that's a billion people, are utilizing DeFi, the opportunity that's at hand. Last but not least, in this video, he talks about lending and borrowing and how it's going to scale. And then I'll play that last video clip of the gentleman on stage mentioning that institutions, smart money is not going to leave that opportunity behind.
And now we're focusing on the Aave V4, and which is going to be more efficient infrastructure for all types of lending and borrowing. And the reason to actually make more efficient infrastructure is that the whole lending and borrowing landscape will change a little bit. Will not change, but it will expand. So there's going to be different types of value coming on chain, from RWAs to all different kinds of initiatives. And we want to prepare Aave to be a
right. So he just talks about preparing Aave for this wave of capital that's about to onboard into the space via lending and borrowing. Now listen to this gentleman here. Okay. He goes on to confirm that financial institutions are not going to leave that opportunity on the table.
A market that's north of 10 trillion of assets. It's all paper.
Yeah.
There's really no digitization, blockchain or otherwise. And so I think it's only a matter of time until you can perform those other functions, lend, borrow, provide liquidity to facilitate trading, these types of things, which also enhance your returns.
Yeah.
Right. So by making it composable, now you can actually boost your return on top in a fundamental way.
Yeah.
And so I don't think, smart money is going to leave that on the table once they understand the mechanics.
Yeah.
Boom, drops the mic. Smart money is not going to leave that on the table once they understand the mechanics. Remember, we talked about the TVL locked. Well, let's just go look at Hedera real quick, because look at what Hedera is doing. We're on the topic of incorporating institutions into the DeFi ecosystem. Look at this, $47 million of TVL locked in the Hedera ecosystem. Well, if we go back to a post that I made for you guys, this is back from July 15th, when me and Mr. Aqua started telling you guys about DeFi, like super heavy, after we figured out how to compel and organize and, condense all the video material that we were creating, showing you guys that, we were earning in DeFi to create our DeFi university, right? This is when I put this post out. Last bull market, XRP, XLM, HBAR had no DeFi ecosystem helping boost the momentum like ETH did. That all has changed. You've seen nothing but DeFi developments on the XRPL, Stellar, Org, and Hedera, right? The ride this time will be different. Utility bull run or not, we're about to have a DeFi bull run. Like, check this out. Look at this. This is from the HBAR Foundation just yesterday, October 4th or 24th, 2024. Institutional DeFi requires interoperability across the EVM. So what took place? Layer 0, the omni-chain interoperability protocol with over $500 billion in value transferred so far, has integrated with Hedera to establish the future of the ecosystem and the network. Through Layer 0, developers can apply omni-chain apps natively on Hedera and extend 70 plus other chains, including Solana, Base, Arbitrum, so on and so forth. It says alongside this integrated this integration with Hedera Network, Layer 0 builds on our previous work with Copper, right? So if we pause right there, what happened with Hedera and Copper? Okay, this is the announcement, by the way, straight on the HBAR Foundation website. Okay, but going back to the Copper mention, well, back in August 13th, 2024, Copper integration affirms Hedera as an institutional DeFi leader, right? We are excited to announce an integration with Copper, a leader in digital asset custody, collateral management, and a prime services, bringing a trusted partner to HBAR custody, staking, and DeFi transactions. Copper literally is an institutional provider platform, like provides access to from financial institutions into this digital asset space, and they're partnered with Hedera, who just made a DeFi announcement talking about, look at this again, what did they say? This isn't coming from me, you know, institutional DeFi right here. That's the first two words in their most recent post, right? And how many HBAR holders out there don't even know? They're just buying up HBAR because their favorite YouTubers like $20 HBAR. Oh, tomorrow, blah, Fibonacci, blah. Like, you know, okay. So last but not least, because I know Mr. Mann wants to share something real quick, but in their post, right, they're talking about the EVM sidechain, right? Interoperability across the EVM. Well, do you all remember? I remember stuff that I watch, and because these are all the videos I watch. Check this out. This is Tyrone Lobin from JP Morgan. Okay, listen to him confirm that they are testing out DeFi, and this is all in order from when they leave the proof of concept testing environment on private blockchains for them to drag and drop onto public blockchains. And that's why they're building on the EVM sidechain. Listen to what he says here.
More public, or what you guys are using today. And Eric, I know you have really interesting opinions on where that's going to go in the future.
Yeah, and maybe I can just provide a little bit of context in terms of just the traditional financial services market and how we think about the requirements really to be able to operate a safe and sound system. So JP Morgan processes about $10 trillion of payments every day. That's 400 times the global stablecoin daily volume. The global FX market is about $5 trillion. And so when we think about utilizing blockchains as a settlement layer, we need the infrastructure to actually support these volumes, and we need them to support the scale that the traditional financial services market is at.
So he's literally not denying that $10 trillion is not going to come on chain, but he's saying that in order for them to bring that on chain, the infrastructure has to be there. What did Sergey explain to you is happening right now? What did all the other participants on stage explain to you is happening right now? That whole entire building of the infrastructure for these institutions to come on board, it is happening. It is undeniable that that is happening right now. If you try to combat against that, I don't know what else to show you, so just listen to what he further says.
So right now, clearly, there are a number of reasons, both technological wise, but also regulatory wise, as to why we have to use permissioned blockchains. However, you can think about these, globally ever-present, always up, highly redundant public blockchains as a really, really attractive settlement layer that can, service this global market. However, until we actually solve some of the key challenges, specifically around privacy, specifically around things like AML, KYC, it does become difficult for us to fully step into that environment. We did a project last year with the Monetary Authority of Singapore where we demonstrated what it would actually look like for a regulated institution like ourselves to utilize public DeFi protocols, to utilize public blockchains. And very clearly, there were lots of very insightful learnings for us. The transparency that you get around DeFi pools, for example, the ability to have anytime price discovery through a DeFi protocol, very, very important and interesting. Also, the lower cost. But as I said, until we actually have some clarity around the ability to actually operate on this infrastructure from a reg perspective, we're going to have to be in the sort of permission view until we can take some of the hybrid steps. And those hybrid steps look like some of the existing infrastructure that is coming out right now around subnets or permission zones or these kinds of things. And from our perspective, the reason why we operate an EVM sidechain is so that everything that we build can actually be portable into a public environment. So all of our contracts are written in Solidity. We use ERC20s for the most part for our tokens. All of our developer tooling is, utilizes the public Ethereum ecosystem's tooling set. So actually moving into the public blockchain environment when we can will be much of a sort of a lift and drop scenario.
Yeah, bro. Yeah, I don't even know if your jaw didn't just hit the floor after he said that. I don't know what else to show you, because look at exactly what the HBAR Foundation just announced. Institutional DeFi requires interoperability across the EVM sidechain. He just explained to you why they're building it that way. Anyways, my spiel, I got to take a break because my throat is killing it. So I'm going to let one of you guys take over. But before I do that, real quick, since we got 700 listeners on the live right now. All right. Many blessings to you guys. Thank you guys so much for tuning in. If you are one of my followers, do me a favor. Seriously, 700 people on this call right now. We should be able to get Frank right here running the CYPRX Research Labs team right now on his back. Created the Twitter and ran that up to 300 followers within a month, organic. So, go over there, head over there, give him a follow. Look at some of the stuff he's been posting and researching about CBDCs, digital transformation, digital asset revolution, regulations, so on and so forth. Just all good, non-opinionated research. All right. He's got a Twitter he's running over there, just at CYPRX Research Labs. You guys can click. He's on the live right now. We also got Mr. Aqua. If you're one of my followers or one of Mr. Mann's followers, go give Mr. Aqua some love. He's got some really good, juicy information showing you how to use liquidity pools and get your digital assets working for you. Then we got Mr. Mann. You guys don't even know, how. I think if you guys have just came into the conversation, we were talking about Mr. Mann and how his services, at the end of the day, they're worth so much more than $5 for a breakdown. He's got institutional insights. He's got research capabilities that I've never seen in this space before, digging up documents that take people and would take people hours to read, right? And he's doing that for you guys on his free time. So go give him a follow, So anyways, my spiel is done. I feel like I've dropped the mic. I've confirmed for you guys now that financial institutional interest in DeFi is 100% there. They're building out the infrastructure now. This is why you should get involved and educated. Myself, Mr. Aqua, Mr. Mann, we're not telling you guys to go out there and friggin' get involved in DeFi and expose your capital. That's up to you. But at a minimum, tap into the education that we're providing. That's mandatory. That's mandatory. Don't get off this call and go tap in. If you do that, what was the point of you sitting here for now an hour and 17 minutes? You know what I'm saying? Like, come on now. All right, so I'm going to hand the mic over. I'll let you guys do your thing. I think Mr. Mann wants to share a screen, and I'll let you guys take over. I'm going to give my throat a break real quick.
Yeah, take it away, Mr. Mann. Go ahead, brother.
All right, for sure.